All right, good morning, trade pros. Welcome to the morning market update for Friday, March the 8th of 2019. This is George Papsov, Trade Pro Academy. Different angle, different vantage point here. You can see our office in the background, a little bit messy, but it's okay. We'll clean it up. If I move back, here's the boys, Victorio and Marky. I got a little bit of a tan. So we're looking, the market just broke a new overnight low, guys. The elite team members who are short, there's a little bit more opportunity down to the 20. All right, so this morning we're going to talk about a few things. Some great trading opportunities already. This morning is the non-farm payrolls report. It's the jobs report for the month of February that comes out on the first Friday of a new month and a new beginning, sometimes second Friday. All right, and let's kick it off by talking about that first. The expectation was for 180,000 jobs to be added in the month of February. All right, and the report came in at just 20,000. That's a huge miss that we saw here in the non-farms report, in the jobs report. S&P on this screen here was trading at around 38 at the time. Now we're down, and we broke the previous low of 26. So we've dropped about 13 points or so as we're looking at other markets on here. I mean, you guys can't really see it that great, but this is our correlations chart. Gold's up, the yen's up, and the US dollar was down initially. So we're seeing a bearish reaction to this non-farm payrolls report. Here's why it's bearish. 180,000 jobs was kind of the long run average of 2018, and 20,000 jobs is way below that. That's a huge miss in terms of what we expected. So only 20,000 jobs were added in the month of February. Now in these reports, there's something called the birth death adjustment factor. And this is where the BLS, it should be just BS, Bureau of Labor and Statistics, adjusts that number based on the fact of how many people have left the workforce or were added to the workforce by factor of passing away or being born. And this adjustment factor allows the BLS to play with the statistics number. If we incorporate the adjustment they just added, we actually have a negative jobs number. So which means in February, without the adjustment factor by the BLS, jobs were lost in a net total basis. And that's the first time in a very long time we've seen that statistic. And that's very bearish for the economy. And this is the number that's buried into the headline. So traders today will say, oh, yeah, it was only 20,000 jobs with an expectation of 180,000. Yes, and it's worse than that because there's actually an adjustment factor that took us out of the negative territory. This number has been noticed. I think we're going to see a lot of downside throughout today's session. Targets 2,700 even on the SPOOs, S&P 500 futures, or about a 26-point drop into this morning that we're looking for potentially. Doesn't mean that we can't turn around and get bullish here, but the trend is down. We're going to be selling rallies. All right. In addition to this report, the average hourly earnings went up. So it went to 0.4% versus 0.3%. So employees are making more money on an hourly basis, but number of jobs are down. So what does this suggest to you? Imagine you're a company or a business who needs to hire and have employees. Well, you're hiring less employees, and the ones you have are getting paid more. So this could be indicative of a topping cycle from an economic outlook, or it could be something where you're laying off employees that are redundant and reallocating those roles to other employees within the firm and paying them more for it. It's too early to call that, but this is what usually happens at the top of an economic cycle or an economic peak before we get into the contraction. This is very important. The Federal Reserve looks at these numbers. They've taken note. And it looks like at the time, this validates their move to go dovish. They stopped raising rates. They also stopped or are going to stop unwinding the balance sheet. And this dovish action is now justified by a weaker jobs report. You'll see in the next meeting minutes, next meeting that the Federal Reserve speakers have, this will be discussed. And they'll say a slight drop in the job market. They've been saying the strength in the job market's been the reason we've been hiking. Now they have an excuse for their pause or their dovish turnaround, which is good. Markets will say, hey, look, Fed's got our back. That's good for stocks, but overall, it's bad for the economy. So this is a negative economic number. Average hourly earnings were up. Unemployment rate was at 3.8% versus 3.9% expected. So the unemployment rate dropped, but that's for February. And the real big miss here is that headline number. It's going to be very interesting to see in next month's report. And there's going to be a lot of discussion around this in the Federal Reserve and how they adjust course for the future. Very, very important. Stay bearish on the equity market today. Downside's coming out. Sell rallies. All right, let's take you through another update. The Dow Jones Transportation Average. This is an average of trucking companies logistics operators and shipping firms is down 11-day or 10th consecutive session on Thursday. All right, so we're seeing a decrease in the Dow Jones transports. If you look at it on a daily chart and you map out the DJTA, the transports average, versus the Dow Jones Industrial versus S&P 500, you'll notice that the industrial or the transportations are taking a dip lower, leading the way down, while Dow Jones is a little bit higher along with the S&P. The transports index is a leader. There's something called the Dow theory that suggests wherever transports go, the market will follow, and Dow Jones transports are weaker before any other markets at the top of an economic cycle. That's another confirmation of what's going on here, that the economy is topping out and is even now starting to look more negative. That was kind of confirmed by the previous GDP number. So this morning we have a lot of things indicating the economy is slipping and the market's just selling off to reprice that outlook in that latest round of data. All right, in Asian markets, everything was down across the board. Japan's down 2%, Hong Kong's down 1.9%, China's down 4.4%, huge sell-off in the Shanghai market. In Europe at midday, London's down 0.5%, Paris is down 0.7%, Germany's Frankfurt index is down 1.1%, and futures in the United States are all down 0.5 percentage point or more, especially with this report price. And look at this, we're hitting new lows. We're now trading 24 even. You can see on the chart, I'm going to just bring you here. This is what we were talking about. This level that we were looking at, that was the previous overnight low, the 26. We're breaking it. This blue line here is the target of the 20 even. So any of our elite members who are still looking for the short or a short, we talked about this. We traded in the elite trading room, said the level to watch is 20. We're just 3 points above it right now. So great opportunity to the short side. You see other markets are dropping down quite dramatically as well. What else could you see? That's all I'm going to show you. How about that? You see a lot of stuff, but that's all I'm going to show you. So that's what we got for today. Look to sell rallies in the morning. Watch once we hit the 20 level what takes place. If there's a little bit of support, we can have a pop back up, and then be very, very focused for that 2,700. I think that's where we're going in today's market. Today's got the opportunity to be a really bearish runaway day. You've been warned. If you're going to get long, remember, you're trying to pick a bottom. You're trying to catch a falling knife. How do you catch a falling knife? If you want to do it, you don't sit there and say, oh, I got it. You move out of the way, let it drop, and pick it up. It's the only safe way to do it. I'll tell you what, though, if you're looking to buy this market just because it's cheaper now, you might be waiting a long time for that knife to fall and settle, because it might be dropping all day. You're going to miss the larger opportunity to downside. So sell rallies on this market. 2720, 2700 evens the target. We're going to be trading oil as well. Oil is just puking, and everything's selling off this morning and the end of this week. Gold and yen are the only things holding on to gains because they're inversely correlated assets. If you want to trade with us in the trading room, elite members get advantage of trading these reports live with us in the 24/5 trading floor. I invite you guys to join us. These are the kind of things that are super valuable. This morning alone is an opportunity to pay for your whole membership for years at a time. All right, I'll see you guys later. Thanks for tuning in. Have yourself a fantastic weekend. We got 2 great videos coming out on YouTube this weekend. Can't wait to share them with you. All the best. Be careful out there this morning. Have a risk management strategy and respect it. Whatever capital you've allocated on a daily basis, do not allow yourself to lose more than that. Treat this like a business, because it is. Have a plan, and more importantly, stick to your plan. A plan is useless if you don't stick to it 100% of the time. All right, you guys take care. Have yourself a great day. Got to open up the trading room. We got a lot to talk about today, a lot of trading opportunity. See you later. All the best. Goodbye. All right, trade pros. Let's jump in here. I'll give you guys some levels in the S&P 500. I'll flip it over to Victorio to talk about NASDAQ, Mark the Dow, and then Steven to cover oil. Oil's had a decent slide as well. Let's get into it.